Let me know when it's working.
Yeah.
Hello? Is it working now?
Unplug the.
Ready? Ready? Hello? Sorry about this, guys. Some technical difficulties. Ready? Hello, 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 hello. Okay. Sorry about the technical difficulty, guys. So there's one lesson. What? There's one lesson that I learned in my early 20s that I still remember. And the lesson that I learned, it is easier to drop your pants than to pull them back up. Once you drop your pants, there's no going back. Everything is reviewed. Everything, everyone can see everything, right? And when it comes to buying a home, the last thing that you want to be caught with is your pants down. Right now, it's a seller's market. We don't know when it's going to become a buyer's market, but in a seller's market, you have one chance. The last thing you want to do is get caught with your pants down and you can't pull them back up quick enough and you fall out of escrow or you delay escrow and then you have to pay extra fees. What's going on, guys? My name is Min Win with What's a Mortgage. Welcome to our channel. The goal of our channel is to simplify home ownership. And tonight, I'm going to teach you and show you how to make sure you don't get caught with your pants down in the home buying process. Sometimes you get only one chance at getting your home. We want to make sure that you keep your pants up so you finish the home buying process and make it into home ownership. If it's your first time tuning in, do me a huge favor. Hit the subscribe or notification button so you're notified every time we go live or post new content. We go live Monday nights on Facebook and YouTube at 9 p.m. and we post content daily on Instagram and TikTok. So if you're not following us on Instagram, TikTok, go ahead and do so. Also, this is an interactive channel. So if you have questions regarding home ownership, bring it on. At the end of our stream, we will definitely answer everybody's question. All right, so there's 3 things you want to know before you enter home ownership. There's 3 things you want to know if you already been qualified. You want to know about the home buying process if you've never bought a home before, right? You want to know about the do's and don'ts if you've been qualified. And you want to know what to look out for after you've been qualified so you don't get disqualified. As the market shifts and changes, as guidelines update, right? You want to make sure, and rates update, you want to make sure that you don't go from qualifying, you're like, oh, I'm qualified, and you get into escrow, and all of a sudden, you're not qualified to buy a home, right? Your pants go down, and you can't pull up your pants quick enough. And now you got to wait for the next house once you fix your situation. So let's get into that, right? So let's talk about the home buying process. So if you are still saving, working on your credit, or you're about to get approved, you want to know what is the home buying process, okay? And some of you guys have been pre-approved already. What's the next step? All right, so let's talk about the complete home buying process. Step number 1, finding the right lender. You want to make sure you get a lender before you start falling in love with any properties. I see a lot of people lose interest, lose motivation, right? They're so stressed out because they skipped this process. Yes, I agree. We start falling in love with the home first, and that's what motivates us. But if you're not pre-approved or pre-qualified, or right, you shouldn't be looking at houses. You do not want to, get your bubble burst, right? You don't want to go back to tell your friends and family with your tail between your legs and say, hey, I couldn't do it. Right? So definitely get qualified. You want to make sure you find a lender. Number 1, you want them to be licensed, right? There are some crazy people out there trying to slang mortgages and they're not licensed, right? It sounds crazy, but make sure they're licensed, right? Then you want to make sure they're transparent about rates and fees. One of my biggest pet peeve is when a lender says, we don't know your rate yet, right? I don't know your rate. If they run your credit, trust me, they know your rate. I don't care what anyone says. Of course, you're not in escrow yet, but they should know what your ballpark of rate is, right? A lot of lenders don't like to share that. And they should know your fees, right? Some lenders, I don't like the fact, well, we don't know the exact fees. Yes, there's not an exact, they use that as an excuse, right? You should know the ballpark of what the fees are, right? Don't forget, if you're buying a house and it's expensive. No one buying a house is not cheap. You should know how much it costs. So if a lender doesn't start transparent with the fees and rates, you might want to go pump your brakes, homie, right? And next one, you want to make sure they give you options. Sometimes it's not worth doing down payment assistance. Sometimes, it might not be worth going FHA or conventional or VA, right? Or I think most of the time you should go VA, but you should hear options. If they don't show you options, like I always said, you make them an option. All right. So make sure, step one, you find a loan officer who's licensed. They're transparent about rates and fees. They go over other options. Not saying that those are better options, but they should tell you, hey, these are other options you might be interested in. If you're not, this option is great as well, right? But they should provide those options for you. Okay. And remember, so once you decide who it is, you want to get pre-approved by them or underwritten approved, right? Some lenders do pre-approvals, which means the loan officer gathers all the paperwork, reviews it, and issues you a pre-approval, right? It's not approved by the bank yet. It's been pre-approved by a loan officer. Sometimes that causes loans to fall out of escrow, right? You drop your pants. But tonight we're going to go over to make sure if your lender only does pre-approvals, right? Uncle Min is going to make sure you don't fall out of escrow. But if you want that concrete, that good, right? That guarantee, you want that underwritten approval. So the loan officer takes in all the documents, right? Gives it to the underwriter, and the underwriter reviews everything, and they issue you that underwritten approval. You still got conditions you got to work on, but the income, the assets, the important meat and potatoes of the mortgage, of you qualifying, they've already reviewed it. The person, the shot caller who calls the final, makes the final decision that you're going to get the money or not, right? You want them to review it. So if your lender offers underwritten approval, go for it. Hey, it might take a couple more days, but it's worth it, right? You don't want to get caught with your pants down. So step one, finding someone you like, getting that transparency, getting options, right? Submitting all your income documents, either get a pre-approval or an underwritten approval, all right? We'll go over new construction in a second, PDCD. But even if it's new construction, right, you go to the builder, you provide all that information. Let the builder lender pre-approve you because they're going to run your credit. They're not going to go off of someone else's credit report. So definitely, if you're buying from a builder, step one, you might not need to find a lender because the lender's already sitting at the builder. But ask the builder about fees, rates, right, options. Get that pre-approval or underwritten approval. Step two, finding the right real estate agent. It's not that easy, okay? For me, if I was looking for an agent, I want to make sure they know how to negotiate. These days with Zillow, Redfins, Homes.com, Realtor.com, all these home searches, most of you guys can find a house. It ain't that hard. Most of you guys know how to drive to the location. So you're not looking for someone to help you find a house or an Uber driver. You're looking for someone that can negotiate, right? You see me, you see me. Okay, what's the final saying? All right. You need someone that knows how to negotiate with the seller to make sure you end up with a good deal, right? You don't want a bad deal. You want a good deal, right? You want to go right there and get the good deal. So make sure, right? That's my little Asian accent right there, right? You want to make sure you get that good deal. So make sure they can negotiate. If they talk to you and they sound like stuttering Stan, but eat, that's all, folks, right? You might want to think twice. You want someone to come in there with that confidence, right? And go, right? Even though it's a seller's market, my buyer is legit. They can make it happen. So make sure they know how to negotiate. Also, I like someone that knows home improvement. Unless you're buying new construction, right? You want to know someone who knows the cost of improving a house. You're going to go into the house. It might not be perfect. In a buyer's market, you can negotiate. That's why you want that good negotiator. But in a seller's market, you might not be able to negotiate. You might have to pay for something to get fixed. And you want to minimize your costs, right? So you want that agent to go look at something and go, hey, this it's going to cost X amount to fix this. Is it in your budget? If it is, let's push forward. If it's not, we got to bounce, find another house, right? Let me tell you a story about this buyer who came to us, right? But they went with a different real estate agent. They went with their aunt. Their aunt even gave them some closing cost help, but they lost his property because of this termite issue. So this termite issue, right? Because of this termite issue, they were pretty deep in escrow, and the seller brought down the purchase price, 20 grand. Whoever was representing that agent, that seller was like out of their mind, right? Did you know it only costs later on, once you read the termite report, which the agent did not read, it was $2,000 to fix. They backed out. Another buyer came in and bought the property, right? And got the discount because they didn't care about the termite issues. So that's why it's really important in a market when you're not buying new construction, you want someone to be able to negotiate. You want them to be able to negotiate, see what's wrong with the property, and be able to manage your expectation. Hey, we're buying this property, but there's some issues, right? I looked on the home inspection, I looked on the appraisal, and by walking through, I knew all these things are wrong. You decide, right? That's why I like my realtors. And it sucks because you meet someone brand new or green or they don't have any experience. In the day, guess what? Not your problem, right? You want someone that either has a home and knows, things that are wrong with their home, either flips homes or have rental properties, right? You want them to be able to know to fix your problems up front. Not be like this. I see so many people reach out to me after they buy a home. They're so upset they bought the home. And when they call their agent is playing like hide and go seek with them, right? They're playing Where's Waldo, right? They're just hiding like ninja style, right? Like Carmen Sandiego, like, right? So you want to make sure they don't dodge you afterwards. And the ones that don't, they know what's up. And they don't, what? You bought the house? All right, awesome. What's wrong with it? Cool. Let me call my plumber. It's going to cost X amount. I already know, right? You want that certainty when you're buying a home. Step 3. So after you find a lender, get approved, find a realtor, make sure they're solid, right? Finding the property. This is where everybody is getting stuck in step 3, right? Step 3, finding the home, right? Once you find the home, you got to determine the purchase price. You got to negotiate the terms. And right now, deciding the purchase price in a seller's market and determining the terms are hard, right? You want someone experienced. So we had a guy, he's buying a house, right? Owner occupied. In the purchase contract, they gave the seller 90 to 120 days to bounce. You know what happened with the loan? It died. Why? When you buy a home owner occupied, you sign a piece of paper saying that you are going to move in the house in the next 60 days. So if you're giving the seller 90 to 120 days and you're going owner occupied, right? You got caught slipping. So make sure your agent is experienced when they're negotiating, right? Make sure they don't drop their pants either. There's three things that you want to make sure that they don't release, right? Your contingencies. So this is where you need a good negotiator to stand their ground. Okay, if the seller asks for something, I'm going to give it on this, but I'm going to ask for this in return, right? There is the home inspection contingency, which the home inspection is to make sure the house works. Make sure you move in, everything is functional. Say with me, functional. Because the appraisal contingency is different. That's there to verify the value. You verify the value, not the function. The value and that it passed either FHA, VA, conventional, or USDA guidelines. You're buying jumbo, whatever program, that appraisal, make sure it passes those guidelines, right? So you want to make sure that you negotiate the home inspection contingency, appraisal contingency, and the last one, the loan contingency, right? If it was me, I would hold on 1 to the 3. Some seller agents are aggressive. If they know it's a property that's popping, guess what? They might make you release all 3. But if you come in there all weak sauce and not strong, you might release all 3 as an agent, right? So make sure your agent doesn't come in, this is not a time to use a Johnny come lately. This is not a time to use a part-time agent. In a seller's agent, you need a woof, right? You need a woof, right? You need a seller's market. You need a woof. You can't be dealing with a lamb because you'll get a bad deal, right? You need a woof, okay? So make sure that agent, right, they determine that purchase price, right? If the home doesn't appraise, you might have to come in with a difference, right? But make sure you negotiate that up front. Make sure your agent knows how to eyeball. Okay, the value's not going to come in, but we got the money, right? We're stacked with money. We can come in with a difference, right? And negotiate those what's on the seller. Oh my God, I'm going blank right now. The contingencies, right? Make sure you negotiate those contingencies. And then the last thing is your EMD check. So in step 3, once you negotiate the price, the terms, the EMD check, right? The earnest money deposit. It can be as little as, a couple $1,000 bucks, but in a seller's market, most likely not, right? Depending on when you're buying, right? The EMD check could be 10 grand, 1% of the purchase price, 2%, 3%. It's what your agent negotiates, right? That's why you got to sniff them out. No lambs, right? You need a, ooh, woof. Okay, so step one, you got your loan officer, right? You're approved, you're solid, you're ready to rock and roll. Step two, you got that wolf, right? You got that wolf out there negotiating for you, right? Not an Uber driver, right? You can find your own home online these days. You need someone to negotiate. And then step three, once you find that house, right? And you find out how my terminology of finding a house once you open escrow. So once you agree on the purchase price, the terms, right? You cut that EMD check, you open escrow. Once you open escrow, you can lock the loan. On a new construction, once you drop your EMD check and you clear, you know, depending on how long it takes to get the home done, then you have that option to lock, right? Or do a float down. A float down is when you lock a rate on a new construction. Typically, they'll let you lock within 6 months before the house is done. If rates get better, guess what? You get to go down one time. If it doesn't, you're good to go, right? You get your lock money back, or you can put it towards your down payment or closing costs, okay? But if you're not buying new construction, once you open escrow, boom, lock that loan if you want, right? Unless you want to play the market. So that's step three. So now step three, you find a house, you're ready to rock and roll. Step four, you initiate the approval. So in step four is when your earnest money deposit check has cleared, escrow can open. Now you start getting all these disclosures from escrow, disclosures from the lender, the loan estimate. Once you open escrow, right, that EMD check clears, you have 3 days. The lender has 3 days to send you out the loan estimate, and you can shop, right? It doesn't give you that much time. That's why as soon as you get that EMD check cleared, I would shop on the spot, right? Shop on the spot, make sure, hey, who's got the best deal for you, right? And have them confirm it with a loan estimate, okay? Disclosures are going to go out. You're going to sign a disclosure. There's something for the appraisal. You make sure you got to sign right away. Intent to proceed, right? If the intent to proceed is not signed, they cannot go ahead and order the appraisal, right? You want to move forward with the appraisal. The reason why, you want that appraisal and that home inspection, right? You want to know, is the house function, like, can you function in, is the house, right, up to par? Can you live in it? Is it livable? Is it going to come in value? If it doesn't, you want to know it all up front. So you want to sign those disclosures right away, right? Some people, I say, oh, my cousin's a lawyer, but I can't see him till the weekend, so I'm not signing, right? You don't want that. Read your disclosures, sign them. There's no final deal yet, right? As long as you don't release all three contingencies, you're not going to lose your deposit, right? But you want to get the appraisal process started. You want to get the home inspection. Once you pick a lender, you finalize it, right? Once that EMD check clears, if you're still shopping, right, you want to do it quick because once you want to initiate that approval, okay? So right now is where you initiate everything. You upload all your updated conditions. You sign your disclosures, right? That lets the lender know you mean business. So you can either lock when the EMD check clears, you can lock when disclosures are out, right? Lock when you upload all your beginning conditions, right? Updated pay stub, bank statements, any assets they're verifying, any conditions. You want all that done up front in step four. Step one, when you get that pre-approval, right? We'll go over in a second, right? Make sure you keep sending in updated stuff. But in step four, that's when everything needs to come in. If you do step four right, you have a pretty smooth sailing, right? You have smooth, you have smooth sailing ahead of you, right? So step four is very important. Now, step five, this is where loans go to die, right? The conditional approval. So you initiate it, you're going to get that conditional approval, right? This is where they clear the title conditions. When you initiate the approval, right, there's title, escrow, everything is uploaded to the underwriter to verify. If you got that pre-approval, this is step five, can get rough. If you did that underwritten approval and you cleared your conditions before you go into escrow, title and escrow, not your problem. Appraisal, not your problem, right? Unless the home doesn't appraise. This step five is where you have to, a home doesn't appraise, you go back and you negotiate back and forth, right? Step five is where loans make it or break it, right? And to make your life easier, if you do that underwritten approval up front, you're going to be solid. But if you don't do that underwritten approval, step five is going to be rough, right? You're going to get that conditional approval and you're going to see a bunch of paperwork like, why am I collecting more things? I thought I was already approved. Okay, so you want to step five, you want to clear title, right? If there's any liens on title, you want that done. Thank goodness it's not your problem. Same thing with escrow, right? Same thing with appraisal, okay? And then they clear the other conditions, credit, income, and asset conditions. That's why if you do everything up front, remember, with credit, if your credit expires, right, your credit is good for 90 to 120 days. while they're working on the file, let's say it took you a while to find a home, right? They might do a soft credit pull. If they see there's any activities, you've been busy on the back end doing a bunch of no-nos on your credit, they're going to want to pull the credit again, right? And if anything pops up, they're going to want you to clear, hey, what's this? Why'd you apply for a car? Did you get a new whip, right? Is that payment going to be added to the DTI? They're going to ask all that question, okay? Step 5 also, like I said, you negotiate the purchase price if it doesn't appraise, right? So step 5 is important. So in step 4, 3, 4, and 5, you have every chance to lock the loan, right? That's where you want to check rates. You make sure you work with a professional, right? Step 6. If you made it step 6, you're almost there, right? Step 6 is when they send out the closing disclosure, right? The closing disclosure must go out, but before it goes out, your loan needs to be locked. If your loan is not locked, you get no docs. So make sure your loan is locked. The closing disclosure will go out. If your closing disclosure is more than an eighth, 0.125 off, the APR is off from your loan estimate, guess what? You have to wait 3 days before you draw loan docs, right? There's a cool off period. This is the reason why that law came out. Like, well, I'm buying a home. I need it to go like this, right? Because of the crash of 07, 08, they're protecting the borrower. They want the borrower to not be forced to sign something. That's why there's a cool off period, okay? So once you get cleared for docs in step 5, right? The closing disclosure goes out. Yes, you're going to go ahead and clear your, fill out the closing disclosure, right? Make sure it's not off. And then loan docs go out, okay? The loan doc from the lender goes out. And the next step, step 7, you sign loan docs. So now loan docs is out. There needs to be something called escrow docs next. So the lender draws loan docs, escrow draws escrow docs. Once escrow draws escrow docs, you're going to sign. You can either sign at your house with a notary. You can't go out and pick any notary, right? You got to make sure they're a approved notary from the title company, right? The escrow will tell you if they're approved or not approved, right? Some companies don't expect it to be approved. A lot of companies want that notary to be approved. So before you go out and pick cousin Joey or Aunt Joanne, right, to be your notary because they just got their notary license and they're not going to charge you a couple $100, guess what? Don't do that, right? Because you might have to re-sign. And the more you re-sign, the more issues, right? The longer you take to close, things do pop up. What happens if your credit expires, right? What happens if you have some big deposit just pops up because your bank statement expired? Now they ask for a new bank statement or a new pay stub and things don't go in your profile changes, right? So you want to minimize re-signing, okay? So you can sign with a notary remotely, or the safest bet, go to escrow. They will have a notary there that's approved. You can sign with them, all right? Step 8, once you sign, you bring in your money. In step 7, right, they will provide you a piece of paper, right, that tells you your cash to close, your estimated final HUD, okay? And in that amount will be the routing number. And you want to make sure you call the escrow, all right, or you get the routing number while you're in escrow. The last thing you want is you want to avoid wire fraud, right? Sometimes they email you a wire. I've seen it happen all the time. They might change the .com to .con and you send, and that's the email for the wire. You want to make sure you be careful of wire fraud, which happens a lot. To me, call me old school. I know I believe in, digital marketing and digital stuff, but when it comes to something like that, I want to go down to the escrow. I've seen people, there's a story of a lady, a couple that lost like $750,000, right? They got a gift to buy a house from a family member, gone. They couldn't retrieve that money. So make sure you avoid that wire fraud. The one time I'm telling you to get in your car, you don't have to. You can listen to it. You can do what you want, but Uncle Min will tell you, get in your whip, drive your butt over there, right? I want to see the wire instructions directly from escrow, right? Then do your final walkthrough. Make sure this is what you got. This is what you want, right? Even though you might lose your deposit if you release all your contingencies. By now, I'm sure you'd have to release all your contingencies at this level, at this point. But you're like, hey, I'm not going to release the rest of my money because I'm not in love with this house. You do your final walkthrough, you get those wire instructions, and you send that money out, right, to cover the down payment and the rest of the closing costs. And then step 9, your loan funds, okay? So your loan funds, once they receive your money, all the conditions are cleared, they will fund your loan. But you don't get your keys until it records. Depending on the county you're in, some county does same-day recording, which is solid. Some counties don't do same-day recording. So if you fund on a Friday, you might not get your keys till Monday. So don't call all your homies, all your family members, bring over the moving truck, because if it funds and it doesn't record, you don't get no keys. I've seen loans fund and unfund. So you want to make sure, right, that stuff clears. It funds, it records, right? Call your lender, call your title company or escrow company. Hey, when is it? Does my county do next day funding, recording? If it doesn't, you're well prepared, right? Also, but the one boo-boo thing, let's say it funds on a Friday, it doesn't record till Monday, you're stuck paying interest Saturday and Sunday. Might be a couple bucks, but you should know about that, right? So that right there is the home buying process, the complete home buying process. I know every lender, every realtor has their own process. That's the wham fam, what's a mortgage, certified, right? It's tested, right? It's been tested out there. And I feel like I didn't miss any step. And we've been doing this one for a couple of years now, right? So this thing has been tested. So that is the complete home buying process. Hopefully, with this home buying process, you don't get caught with your pants down. Guys, if you enjoyed this content, right? If this content brought you any value, do me a huge favor. Save this video, especially if you haven't bought yet. You want this video in your back pocket. Unless they change stuff, this video has not changed in about 3 to 4 years, okay? Save this video, share this video, and like this video. All right, guys, also, do me a huge favor. If you're not following by now, hit the subscribe and notification button, right? Press it, right? It'll change your life, right? It will simplify home ownership if you press that button, okay? Thank you guys so much. Now the fact that you've been pre-approved, right? The hardest thing is to get pre-approved. But you know what? It's easy. It's easy to fall out of escrow. It's so hard to lose weight, but how much easier is it for you to gain weight? So that's what happened. That's very similar to buying a home, right? So we're going to go over the do's and don'ts after you've been approved, okay? So if you want to make sure you stay approved, you want to follow these do's and don'ts. I see a lot of people get pre-approved, but they don't realize their profile will change. If it changes while they're shopping for a home, they can fall out of escrow, okay? So number one do's. Let's talk about the do's first. Do, right? Guys, let's talk about the do's. Stay consistent in your work, okay? If you are self-employed, make sure you continue those deposits, right? Make sure it's consistent. Things have not changed how you do business. If you're a wage earner, right? If you work 40 hours a week, work your 40 hours a week. If you work part-time, keep up with your part-time, right? Yes, people do buy a home working part-time. So if you work 15 hours a week, stay working 15. Don't take a break and you know what, this week, I'm going to do 10, right? I'm going to do 12. Stay consistent, right? If you are in a job that you kill it in commissions, make sure your commission don't change. You do not want a decline in income when it comes to commission over time, right? You can't control bonus sometimes, but stay consistent. That is a do. Stay consistent. Number two, save money. Don't spend money, right? Wait, step two, where step two? You're skipping steps here, buddy. All right, step two, right? Take that back. Step two, send your loan officer your pay stubs and paperwork swiftly, right? If you want the loans to move fast, you want to make sure you upload all your paperwork to your loan officer ASAP. Do not drag. Do not wait 2-3 days. Upload everything right away, right? So they have time to review it to make sure it's going to meet the underwriter's needs, right? Some of you guys are going for that underwritten approval and not pre-approval. Clear those underwritten conditions ASAP. You don't want to live in uncertainty, right? Raise your hand if you want to live in uncertainty. Not me. I'm borrowing hundreds of thousands of dollars. I've already told my landlord, some of you guys, I don't recommend you do this, but you tell your landlord, hey, by the way, I'm going to be moving out, right? So you got heat from the landlord. You got heat from your family because you told everybody. You got heat from your spouse. So you want to make sure you clear those conditions. You submit everything they ask for. They want something, do it, right? But don't take time off of work to do it because you don't want your income to change. Number three, save money. You don't know if you're going to be short to close. Things can happen. Save that money, right? Do your usual spending. I'm not saying go out and all of a sudden be a hermit and not leave the house, but make sure you don't go ham. Some people start buying furniture, buying things, and they're short to close, maybe $1,000, $2,000. Things happen. They might have to pay off debt to qualify. Don't spend money after you've been qualified. Don't think I've been approved. They've seen this. Let me start spending, right? Save that money. I've seen so many people right? They're short to close. Now they have to go ask for a gift, right? Because the impounds change. Let's say they're supposed to fund in October and they fund in November, and that's one more month of reserves they got to collect, right? And let's say your impounds are $1,000. So now you have to save an extra $1,000. So be careful. Make sure you don't go out and go crazy spending until you close escrow, okay? The next one, pay your bills on time. Make sure you got that auto pay. Pay all your bills on time. It sounds crazy, but I've seen so many people. I'm going to answer everyone's question as soon as the stream is over. Pay your bills on time. I'm begging you guys. I see people miss a bill while they're approved. It's crazy. And if you miss that bill and it's a 30-day late, guess what? It brings down your credit score. So my next one, answer your phone. You want to make sure after you've been pre-approved, answer your phone. Not a lot of people put this one in the do's and don'ts. I'll tell you that right now, right? But I know it because experience, right? I'm not ripping off someone else's do's and some other lender's do's and don'ts, right? This is my own. Answer your phone. For some reason, when you get approved, pre-approved, especially people in that 620, 680 FICO, right? There's a reason why you're not 700, but it's okay. I'm not hating. But when the phone rings, I don't care who it is, pick it up. You don't want one of your debts to turn to a collection. All right, one of them, they try to call to collect from you, either that cable box you're trying to return, that cell phone you never paid off, whatever it is, right? It might be a potential spam call, but take that call. Make sure you don't dodge or forget or didn't answer anyone trying to collect money from you, because they can wax your credit with the collection because you didn't respond. Guess what? Boom, it brings down your credit. Check it out. My wife and I, we went to Hawaii last March. So we paid for our COVID test, but the company, they changed billing companies and they haven't transferred the money over, right? And we didn't know until we got this letter, and it was almost a collection. We had to claw and beg, and if we were shopping for home, I would have been more stressed. So answer your phone. Answer your phone, guys. I'm telling you, the people that 620, 680, I see it happen pretty often, right? The last thing you want to do is a 30-day late or collection this pops you in the face. And after 90 days, when your credit expires and they have to rerun that credit, they're going to see that collection, right? And you don't want them to see that because they can bring down your credit. And last but not least, give your loan officers some referrals. If they do a good job, send them your friends and families. Send them your coworkers, right? It is important. They live off of not hopes and dreams. They live off of your referrals, right? So let's recap the do's. So stay consistent with your pay. Send your loan officer all your updated documents. If you have a chance to get an underwritten approval and not a pre-approval, get that stuff cleared. You want to get that stuff cleared, right? Clear those conditions. Move quick. Save money. Pay your bills on time. Answer your phone. You don't want to dodge any collectors, or they might be a collector. Even if it's a spam call, tell them to go, shove it where the sun don't shine, right? But do not dodge any phone calls. And give your loan officer some love, right? Show them some love. Give them some referrals. They did a good job. Let's go over the don'ts, right? The don'ts are pretty easy, right? Don't take time off of work. So if you use overtime or bonus to qualify to buy, guess what? If that thing declines more than 20%, they might not let you use your bonus overtime to qualify, right? If you were working part-time 20 hours a week, 15 hours a week, and all of a sudden you work 10, and they see it on your paycheck, guess what? They're going to give you the declining income, the lower income, right? If your lender, you want to ask them, did you use overtime bonus to qualify me? If they did, you make sure you keep that thing up, bonus, overtime, or commission, right? Make sure you keep that strong. Make sure you're working your 40 hours a week. If you're not working 40 hours a week, make sure you get paid vacation, right? So your income does not decline while you're taking time off, okay? Another one. This one is the battle of all loan officers, right? You got the new loan officers that know how to read off the internet, which it sucks. It says so on the internet, but doesn't mean it's real. Do not run your credit with multiple lenders, right? When someone comes to me and wants me to shop their loan, I already asked for their copy of their credit report. I do not want to run their credit. I know that CFPB, Experian, TransUnion, they say that a lender, once they run your credit, you have 45 days to have other multiple lenders run your credit to shop for a mortgage. Good luck with that. Don't come to me. I'll tell you, hey, you know what? I'm not going to want to run it because I don't want to be that lender that brings down your credit score. Why do lenders, if they know that, want to run your credit? Because that psychologically is the first step of locking you in. When they run your credit, it's like you're that next step to committing to them. Do not run your credit with multiple lenders. Some loan officers said it's okay. I've ran enough credit in my life to tell you, talk to enough credit repair people, right? When they run your credit, it is a hard inquiry. Well, CFPB says that's one hard credit pull. Look at your credit report. I know when other lenders are running your credit because other inquiries are on the bottom of your credit report under other inquiries. If you want it, that's your own risk. But for me, if you're going to be my client, right, I'm not going to run your credit unless you're for sure going with me and you're not going to run it with 10 other people, right? So do not let your credit be ran multiple times, okay? Next one. Do not run up your credit cards, right? I know you have to save money. Just live normal. Don't go ham. Do not increase the balances on your credit card. Because if you increase the balance, it brings up your utilization. If your credit expires, they're going to have to run the credit again, and it brings down your credit score. So do not bring up the balances on your credit, right? Do not transfer money from one account to the next. The accounts that have been verified by the lender, keep as is. Do not wire money from other accounts. If you have money wired from another account, now they're going to want to track that account, right? They're going to paper trail everything. So do not, if the lender has verified your money, you have solid money to buy, leave it alone, okay? Next one, do not finance anything. Do not go out, like I said, it goes with inquiries. Don't go out and try to finance another car, jewelry, furniture. Don't even go get inquiries, right? After 90 days, they do that soft credit pull. They see that you've been out there busy using your credit. Like, why is someone buying so much on credit all of a sudden, right? It hurts your credit score. Okay, so avoid those things. So those are the don'ts. Let's recap, right? Do not take time off of work. Work your normal shift. Work your normal hours. Do not run credit with multiple lenders. That's just my opinion. Every lender has their own opinion. I would not want to mess with it, right? I don't want to be that bad guy that busts your credit up, right? Do not run up your balances on your credit cards. Do not transfer money, and do not go out and finance anything. A lot of the don'ts have to do with credit. I've seen people qualify and not qualify, all right? So that right there are the do's and don'ts when you've been approved, right? You do not want to disqualify yourself. And here's one bonus tip for you guys before I go to Q&A. Guys, thank you for everyone who's been patient. But these are the 5 checkpoints, okay? The 5 checkpoints. Here's checkpoint number 1. Your current credit report, right? Your credit is good for 90 to 120 days, right? Just pay attention to when you last run credit. Because after 90 days, they will do a soft pull. But they won't run your credit again until the 120 days. The last thing you want to do is take over 120 days to find a house, and they're going to have to run your credit, but you did something sloppy to your credit. So pay attention to when your credit expires. When is it 90 days? When 120 days? Pay attention. Check that, right? There's one of your checkpoints. Number 2, know your income. Look at your paycheck. Look at your bank statement if you're self-employed. Make sure your deposits and your paycheck is always steady or going up. You do not want to decline. If you decline more than 20%, they might re-underwrite your income. I see that happen all the time. So know your income. Next one, know your deposits. Make sure there's no random deposit you cannot explain. Okay? Payroll deposits, you're fine. If you're going FHA, you're allowed one deposit, right? That's 1% of the purchase price. So it's $400,000. That's a $4,000 one-time deposit. Other deposits, you have to source or back it out. Conventional, you have a one-time deposit of 50% of your gross income. So if you make $5 grand a month, that's $2,500. You don't have to source. Anything else that's not a payroll deposit, you're going to have to source that thing. Okay? Next, check your pre-approval letter. When is it expired? Goes with your credit, right? And make sure you don't look at a house above your pre-approval letter. If it is, make sure your loan officer updates your approval letter. I see it happen all the time. People's pre-approval letter expires, or they look at a house, they love it, but they didn't check their pre-approval letter, and the lender didn't approve it. Now the lender's out of town, and you can't get an updated one. So you want to check these things before you look at homes on the weekends, right? Hey, is it above my pre-approval letter? Let me get it updated. And last but not least, check rates. As rates are climbing right now, if you're watching this November 2021, you want to make sure, hey, with rates going up, do I still qualify? Do I still get that lender credit? Or has things changed? If it has, go back to your lender. Get your approval updated with where rates are at, right? So those are the 5 checkpoints you want to check every week as you've been approved. The do's and don'ts, the checkpoints, that will avoid you dropping your pants, okay? So that right there is the secret and the keys to making sure you don't drop your pants. And the last thing you want to do is have your pants dropped while you're approved for buying a home. All right? Guys, if you found this information valuable, do me a favor. Save, share, and like this video. If you're not following me by now, hit that subscribe and notification button. All right? Let's go to some Q&A here. Thank you for everyone who's been patient. If you have questions, I got answers. What up, Joe? What up, Jolene? Miguel, good evening. Looking to buy now, but kind of scared. Miguel, you're not alone. It's okay being scared, right? What I would do, go call a lender and go through the numbers and payments. Once you go through the numbers and payments and you're comfortable, then let them run your credit and let them approve you, right? Baby steps. It's okay. Yes, you take baby steps, you might miss out on a house, but the most important thing, you want to be at peace and be comfortable when you're shopping. You don't want to, oh my God, I got a pre-approval, right? Make sure if you are scared, just take baby steps, right? In God's timing, right? You'll get your house. What up, Terry? I have a question about cash out refinance. If you don't mind, Terry, what's the dame du pregunta? Terry, bring on that question. PDCP is better to buy a new construction home. Can you explain the process with new construction? It's just like this process. The only thing with new construction is you don't have to find a lender. You can. I would have my own realtor, because if you're gonna go with their lender, right? Trust me, if you go with their lender, it doesn't help me out, but you're gonna get pre-approved by their lender. That lender's gonna want to pre-run your credit, check out your situation, right? So if you're gonna go with them as a lender or get pre-qualified by them, you want your own realtor. The last thing you want is not have one person represent you. A lot of things can go wrong in new construction, okay? So definitely make sure you go with your own realtor, right? And I'm not pushing any realtors. I'm just letting you know, go with your own realtor. And once they're almost done building the house, they say you can begin the process, then it's the same steps, right? You're going to initiate the approval. You're going to go through the loan approval. You're going to clear it. You're going to go CD, right? You're going to go sign your loan docs. So it's everything the same as we spoke about in our other video for the complete home buying process. All right, PD? Shang, I'm in Northern California. Am I able to contact you for a pre-approval? Shang Lord, definitely give us a call. 714-790-9697. You can always email us at info@whatsamortgage.com or call us. And if you're a shy guy, shy girl out there, you can always text us, okay? Danny, can you negotiate on new build? You can always negotiate. Doesn't mean they're going to agree to it, right? On new builds, get pre-approved with their lender and get in line. Once you're in line and they go ahead and call your number, then negotiate, right? Don't start asking for something because you might not get it because you don't get the home yet. And you're like, this person's already asking for something. They're not even getting a home yet. They're going to be like, do I really want to approve this person? Not saying that they're going to say that, but in their mind, I'm thinking, dude, I haven't called their number yet. They're already asking to negotiate. The last thing I want is in this hassle, and there's 50 other people who want the same house. All right? So, Danny, you can, but wait till you're in escrow. I'm an owner of a 4-year-old transportation business. What is the best way for me to prove my work history and income? Should I set up payroll service for so my business can pay me W-2 every 2 weeks for 2 years? So if you're self-employed, so Bowden, they're going to go off your tax returns. So if you pay yourself on W-2 or not, they're going to go off your tax returns, right? If you're Schedule C, they're going to go off of line 31. They're going to add back depreciation and appreciation, subtract meals, and add business miles. If you're an S Corp, they're going to go off your K1s and your 1120Ss. So you don't have to pay yourself, but you can if you want, right? They don't go off of W-2s because you pay yourself, right? Because any self-employed person can just increase the number. Danny, if you purchase a new build, how can you see what the house will look like without all the upgrades? So it's hard. You can't see without all the upgrades. So when you buy new construction, you better make sure you have a good imagination. You're gonna go to the design center and pick all the basic stuff, right? And it's gonna be basic. We bought our house with all the basic when we bought our new home, but we tore everything down. Trust me, when it's basic, it ain't going to look like that new construction house. You are in for a rude awakening, all right? Be careful. When you talk about market rates, I keep hearing you say without points. No, what does that mean? Points is when you're paying a specific amount of money to get a specific interest rate. When you get a par rate, that means you're getting that rate, but you don't have to pay extra, right? Just like if I bought this thing for $4 and I sold it to you for $4, that would be par. No, if I bought it for $4, After all my costs, let's say it's $10, right? Then I would, let's say there's $6 in cost, I would sell for $10. But let's say you want to buy for $9. If you want to buy for $9, I charge you $1 up front. Hopefully that makes sense, right? That was a little kind of messed up, but it's pretty much if you want a specific rate and the market's not providing that rate, to get that rate, you have to pay points to get that rate, okay? And it can change daily or even by the minute, right? Terry, I am currently in a VA loan and have been checking my estimated value of my home value of my home, and it's 100 grand more than what I owe, and was curious how that works, if I can get money, if it's actually that much. Yes. So Terry, so if you're thinking about pulling cash out of your home as a veteran, you can definitely do that, right? I would call a loan officer, have them check the value, right? Make them sure they check the value. If you have that much equity, if you've had your home for a while, I might not, if it was me, I wouldn't do a 30-year fix. Maybe do let's say you've had your loan for 3 years. I would do a 27-year fix. Let's say you've had it for 5 years. I would do a 25-year fix cash out, right? The payment is higher than a 30, but if you're going to keep the home, Terry, I wouldn't go back to 30 unless you know you're going to be bouncing soon, right? But to each their own. Some people need that cash flow. But yes, as a veteran, you can get that cash, right? With VA, you can go up to 100% financing. You can borrow 100% of the value, which I don't recommend, right? But definitely run the numbers. You might look at an equity line of credit as well. It all depends on your situation. But the best way to find out, Terry, give us a call, 714-790-9697. Yes, Terry, you can pull out that cash, but you got to qualify for it as well. All right, hopefully that helps you out. Heaven is my, okay, I need an answer. Please help me understand this. I think I have agent okay. I will send everything she needs. She will email, says she has it. After that, I don't hear from her. She was referred to me. That helps my one friend, family member. A loan officer should get back to you within the same day or next day. It's the biggest investment you're going to make. You want certainty. If they're not calling you back, hey, I would go, hey, Mr. or Mrs. Loan Officer, right? Or loan officer for everyone who's not a Mr. or Mrs. or however you want to identify yourself, right? Loan officer, I live by the rule of 24 hours, of same day or 24 hours. If you can't get me an answer for 24 hours, I will find another loan officer that will answer me in 24 hours. This is a big investment for me. I don't care that you help my family member. Don't dodge me, right? Do not dodge me. Give me peace. I need certainty, right? If I get emotional, I might not buy. So you need an agent, right? Your agent. Well, they said they're sending their paperwork, so I'm thinking it's a loan officer. So loan officer, like you're sending your paperwork to your loan officer, right? So definitely you want them or your agent, whoever it is, if they're not replying within 24 hours, you need to bounce them, right? Bounce them. There's tons of agents who will help you, right? Bounce them. Blackbot, how does the equity check get paid out of a house that sells with two? Okay. I want to refinance my house to get my co-signer, co-joint owner off of title on the mortgage before I sell it, before selling my house. How long after refinance can I list and sell the home? Just wait 6 months, right? If you refinance them off, you got to qualify when you refinance them off, and just wait 6 months, okay? So after you do it, wait 6 months. You'll be fine. Priscilla, offer just got accepted. Congratulations, Priscilla. On 599, we waived the appraisal contingency, but now they want it in writing, and the seller would like us to pay the half of the title insurance. Make sure the home is worth it, right? Talk to your agent, talk to your loan officer. It might be worth the squeeze. Plus we offered to pay for septic tank in the city of Nuevo. I'm nervous. Don't know what to do. So if you waive the home inspection, the appraisal, that's fine. Hold on to the loan contingency. Hold on to one of the contingencies. Hold on to the loan one, Priscilla. You'll be good. You'll be fine, right? Like I said, if you're in I don't know where Nuevo is. If it's in a metropolitan area, you'll be fine, right? If it's in a compact area, you will be fine. Just the septic tank, the contingent, what they want for the title policies, a couple $100 ain't gonna change your day, right? So as long as they're not asking you to go above asking price, so you should be good. All right, Priscilla, congrats, by the way. As a business owner, should my deposits be made into my business or personal? If you're using your business, you can still deposit in your business. Danny, whatever you're doing as your business, with your business, keep it the same. Don't make changes, right? Don't make change. They're going to go off your tax returns. They're going to just look at your deposits to make sure that you are still making money. After COVID, a lot has changed. They want to look at your deposits, make sure that you are really receiving that money. They might even ask you for a P&L, okay? JLS, is origination charges same as buying points? When you're looking at the loan estimate, page 2, section A, is crazy. There's that section that says like origination. Origination can be underwriting and processing. There's difference when you're buying points. So it can include it in page 2, section A of the origination, right? So talk to your lender. Hey, what's your standard fee? Most lender standard fee are between $1,500 to $2,000, somewhere around there. Unless you're doing down payment assistance, should be around $1,500 to $2,000 total, right? Some of them are even $1,000, but if they're $1,000, they pad it in the interest rate. So save $1,500, $2,000. Anything above that, you're either going down payment assistance or you're buying down points or discount points, right? Okay. Do you recommend Miri Lyon? Do you recommend getting a real estate license first? I don't know the first question that you asked, Miran. Yeah, if you're gonna sell a house, make sure you have a real estate license. Tips for first-time realtors in negotiating process from a lender's perspective. Mike, what I would do if I'm an agent writing an offer, I would be coming strong and go, hey, I know the home is not going to appraise. I checked the bank account. I already know this. They have this much to come in. Here's the DU, which is the desktop underwriting, or the LP, the loan prospect. Here's a copy. Here's a credit score. Here's my DU. Here's my proof of funds, right? And I'm sure a lender will respect you for that. MJM, why do they wait until a week before closing to let you know what your remaining closing costs are? MJM, because things change, right? Title changes. So don't forget, no one's going to work on a file until you're in escrow. Once you're in escrow, you can always request, hey, can I get an updated estimated HUD, which is a receipt, or an updated loan estimate? Has any of the fees changed, right? So once you're in escrow, right, they're going to provide preliminary paperwork for you to get your underwritten approval, but things can change, right? Typically, the transfer of taxes, some little things will change. Depending on, let's say you're supposed to fund in October, it rolls in November, your impounds go up, right? So some things can change. It's mostly to do with your impounds and your transfer taxes, all right? Hopefully that helps you out. And every escrow company is different, so that's why you don't know the exact fees, but once, you open escrow, you'll get the fees. So definitely, MJ, I completely agree with you. I wish the system was different. Like, it is what it is, but it's a loan estimate because, we don't know what escrow title you're going to pick, or the seller picks sometimes. And we don't know what the title, right? The county's going to tell title to tell escrow. So we don't know those things yet. All right. Hopefully that helps you out. But I don't disagree with you. I feel your pain. If I want a new construction house, can I use my own lender or not the lender of the builder? So you can use your loan lender Excelente, but you still have to get cross-qualified by their lender first. I would let their lender first run your credit so you can get a credit score. Then if with the seller credit and with the rate, if you don't like it, then use your score, shop for a better deal. But you don't have to use them, all right? Viewing your FICO score a few times a month doesn't hurt your score, right? If you view it through Credit Karma and through the free ones, it don't help. It doesn't affect it, right? When you pull your own credit as a soft credit pool, it doesn't affect your credit score. But that score is not accurate. A mortgage lender must run your credit for you to have an accurate score. All right? Hopefully that helps you out. Is it okay to use separate accounts to show income and savings? My husband checking, my checking, and our savings? Yes, you can. Make sure there's no funky deposits in it. If it is, make sure you're able to prove it. You got to quit spreading fear. I dare you. Haha. What about helping others find their value? How about empowering others to find how to create their... What is that? Is it...
It seems like a weird comment.
Yeah. Sorry about that, Linda Young.
I'm not spreading fear.
I'm on...
helping people find their own value.
Well, that was kind of weird. What are some tips you can give us for new construction family homes? In terms of builder lender, should I get a real estate agent? Are you planning to do a video related to new construction? Zeffy, I definitely should do that video. I don't disagree with you. So my tip to you, Zeffy, have your own real estate agent. You want someone to have your back. In new construction, I would pick, finding an agent first over finding a lender. That's the only time, okay? Traditional, find a lender first. Find a realtor that has your back. Get qualified by the builder's lender because they're going to want to run your credit. Let's say you had your credit ran by a broker or another bank. That builder is going to still want to run your credit. So might as well let them run it, have your credit score, see their offer, and then if you can find someone to beat, most likely, I say about 50% of people go through the builder lender, right? So definitely, but doesn't mean you shouldn't shop. There isn't a better deal out there. Definitely talk to another lender, see if there's a better deal out there for you, right? But you pick your own realtor. So you want someone to have your back, right? Get qualified with their lender, and then shop it if you don't feel like it's a good deal, right? If you have your own realtor and your realtor's pretty good, they'll know, hey, this is a good deal or it's not a good deal, all right? And then you're in the waiting period. If you're going to go with a builder lender, do a float down. If you feel like it's going to take forever to close escrow, a float down means you can buy the house, you can lock in your rate, but if rates get better, you can pick up the lower rate. It does come at a fee, but let's say rates don't improve, right? They don't improve. Whatever you pay for your lock fee will go towards your down payment or closing costs. All right. Hopefully that helps you out. For more answers, please give me a call, 714-790-9697 Z-Fee. All right. But yes, I will make that video. All right. Thank you so much. Thank you so much, MJM. Ryan, how soon can I apply for credit cards after closing on a home? If you close on a home on 11/18, 11/19, 11/20, you're good to go. Make sure that thing records, like I said. All right. Can a gift of money from a family member be used for down payment? Make sure they gift you. If you're going conventional, make sure they wire that money to escrow. You don't have to source it. If you're going FHA, you're going to have to source it. So make sure your family members are willing to show their bank statement. All right. Hopefully that helps you. Guys, I really appreciate everyone who came on tonight and asked questions. Hopefully I brought you value. My goal to come on doing live is to do a couple things. Number one, bring you value. Number two, I didn't have to put my son to bed. My wife did, right? I'm kidding. My wife, if you're watching this, I am kidding. I love putting my son to bed, okay? No, but to let you guys know that I am a real loan officer. I don't do as much loans as I did back then, but I'm not some influencer reading out information. But I do read other influencers' information, but I'm a real loan officer going through real scenarios. That's why I'm able to give you real scenarios. I might not know answers about everything else. But when it comes to residential mortgages, I know a lot. And whatever I don't know, I'll figure it out. But I come on live to let you guys know me, know my personality, but know what? I am real and I am here for you, right? And I want to make sure I give you certainty in the biggest investment you're going to make, which is home ownership. Hopefully that helps you out. A couple ones. 2.99 conventional, take it and run. FHA, that's not a good deal, okay? Big Tizzle production, VA cash out, you can go up to 100% of the appraised value. You still got to qualify. But before you go back to a 30-year fix, look for a shorter term, right? Think about it. For you to have equity to pull cash out, Big Tizzle, right? You probably have the property for 3 to 5 years, 10 years. Dude, you're almost done with the race. Especially if you're like 10 years deep, you got 20 years left. The last thing you want to do is do a cash out refinance and go back to year one. Your payment is cheaper, but you're going to pay more interest long term. But if you don't plan on living in that house forever, within the 5 years you're going to bounce, you might want to do 30. But it all depends on your situation. Best way to do, give us a call, Big Tizzle, 714-790-9697. You can either call us, text us, or email us, info@what'samortgage. All right, we'll get back to you. If your student loans are deferred due to COVID and there's no payment. So, dude, there's more questions. So MJM, if your student loans are deferred, right, what they're going to do is if the balance is 30 grand, they're going to take it and times it by 0.5%. They're going to add $150 a month to your monthly debt to income ratio. Okay. So before it used to be 1%. So on 30 grand, you would get hit with $300, which is almost $50,000 more home. Now you can get hit with $150. Hopefully that helps you out. Thank you. 1 hour past my bedtime. Good night, Miss Lalonde. Thank you for staying on. What helps loan officers want to work harder for you and give you the best APR? Let them know you got a friend named Min who's a loan officer, and that if they don't treat you right, you can call Min, right? Tell Nico, tell him Uncle Min's watching, right? So don't be tripping. Tell him, don't be tripping. I'm watching. That you verify everything with this guy from the internet, right? I'll help you read your loan estimate and beat it if you want. But if they know someone's watching, right? They ain't tripping. Think about those nanny cams. If you were a nanny and you know there's a nanny cam, you ain't going to plop your feet up on the couch, right? You're welcome. Thank you. If is the only way to use equity towards down payment or a new new owner occupied home to complete the sale of a current before making an offer a new home. No, Blackbot, you can do something called a bridge loan. Reach out to me if you want to know more about bridge loans, all right? You can do the bridge loan, but then you have like 60 days to sell your house. Guys, if I brought you value tonight, if you're not following me, please hit that subscribe and notification button, all right, guys? Follow me, especially on TikTok. I need the followers on TikTok and Instagram right now. I already have a car loan, and I bought it in January, and I keep seeing Zillow says my home is worth $420, $430. I owe $320. Reach out to me, Tizzle, all right? We can see what we can do. Check out that DTI. I wouldn't pay off the car because you can pay off the car in the cash out refinance, right? Don't pay out the car out of pocket. Save the money. Do a cash out refinance. Pay off that car, right? So what else? Can I still house hack a new build for? If you own a home, it's hard to house hack another fourplex. I have managed my own fourplex before. What do I need to do? Robert Marine, please reach out. Yes, if you manage a fourplex, you can buy a fourplex. If you buy a fourplex and you put 25% down, you can use the future rental. If you go DSCR, you can use 100% of the rent. All right. If you don't own a property yet and you buy the fourplex, you got to go conventional. If you already own a property before and you buy a fourplex, you can use DSCR. Reach out for more information on how to buy it if you don't show any income. All right, guys. Lastly, thank you for everyone who watched. We want to say thank you to everybody who watched. Our attitude is gratitude. Without you, there would be no us. So thank you guys so